Thank you for coming, Congressman Grijalva and I. Come on over, say hello. We're here to announce the release of a letter to Attorney General Holder asking him to do an antitrust investigation into whether the conduct by the nation's largest banks to offset the action by the Treasury to give fair pricing to consumers on debit cards is price signaling in a violation of America's antitrust laws. Little background. As you know, after a long and very difficult battle, the Congress passed legislation authorizing the Fed to establish what were called reasonable and proportionate rates for debit card transactions. The Fed initially set rates, said that what was reasonable and proportionate was 7 to 12 cents. After a fierce lobbying effort by the banks, first to defeat the legislation, and then secondly to temper it, that went up to 21 to 24 cents. That was a reduction from the average debit transaction of 44 cents. Now just indulge me in explaining a little bit of background further. Debit cards came into use and were a creation of Bank of America, which has been the leader in trying to restore this pricing power for the banks. And the point of the debit card was to allow the banks who had the obligation to clear a check that consumers or depositors used, but for free. So if you paid a merchant $1, they got $1. And the cost of clearing those checks was anywhere from 60 cents to over $1. They introduced debit cards when they founded Visa, MasterCard, and then began promoting the use of debit transactions as something that was convenient for consumers and very much cheaper for the banks. Over time, they then imposed significant expenses in the use of any kind of debit transaction. And originally it was 63 cents per swipe. So every time a person used a debit card, the cost was 63 cents. There was an antitrust action that was brought by plaintiffs in 1996 that was settled in 2003, where there was a finding of antitrust activity on the part of Bank of America in the Visa MasterCard. And the settlement brought that cost of the average swipe fee down to 44 cents. And there was a $3.4 billion payment by the banks, the defendants in that case. But the battle continues. And the battle is continuing with an immense increase in concentration of the largest banks and an enormous concentration in wealth. This chart over here shows what has happened with bank consolidation since 1990. In 1990, we had the 37 largest banks are listed on the left. Today, those have merged into 4 mega banks: J.P. Morgan, Bank of America, Wells Fargo, and Citigroup. These 4 institutions control $7.7 trillion in assets. Their depositors oftentimes have monthly balances in the range of $2,000. What happened in this last Congress was that after Dodd-Frank passed and the Fed established reasonable and proportionate rates, the bankers immediately responded that they were going to make up the money in other ways. And before the ink was dry on the consumer protection action that the Fed took, the head of the Texas Bankers Association not only spoke out publicly, but contacted all of his banks. That's a major banking association, saying, quote, "Now the industry must regroup, and each and every one of you must decide how you are going to pay for the use of debit cards. It may be through a monthly fee. It may be using a proper prepaid card as opposed to a debit card. It may be that there is another way not to offer retailers instant credit." Comments were made also by the head of Wells Fargo, by ABA President Frank Keating, by the Community Bankers Association President Jerry Walker. In antitrust law, the term price signaling is used to refer to activity by market participants, in this case the big banks, where they communicate a way of establishing prices that benefit them and hurt the consumers. Now, Mr. Grijalva and I do not have all the evidence, and we don't know whether there has been, what the outcome will be of an investigation. But what we do know is that there's enormous historical evidence of banks using their monopoly power to impose unfair anti-competitive burdens on their depositors and on consumers. And our request of Mr. Holder is that he, as the Attorney General, the representative of all of us, conduct an investigation to determine whether, in fact, there was a violation of our antitrust laws. Now, I want to say this as a person who is the lead sponsor of the credit card swipe fee legislation in the House. We must have in America a strong banking system. It's absolutely essential. And credit cards and debit cards are very important to commerce, and they provide great convenience to consumers. But they should be offered at a fair price, the price being established through competition. And where you have a history of the banks concentrating assets, $7.7 trillion, working together historically to establish prices that are not competitive, and the consumer ends up paying, to the point where in America, American consumers and American merchants paid the highest swipe fees in the world, you don't have a competitive marketplace. And it's all fair and square for banks to set their price, as long as that price is subject to the laws of market competition. And the history of bank conduct with credit cards and debit cards is that they've used their pricing power and their monopoly power to set prices that are not competitive. And essentially, this Congress has to decide which model, business model, should be encouraged. The business model of community banks, local banks, where they compete on price, on service, and on competition, or the big bank model that is all too much now a fee-driven shakedown of consumers. And you know, Bank of America is saying they've got to make up the money from the Durbin bill. What they don't tell us is that 3 months ago they paid $8.5 billion in a settlement to some of their largest institutional clients, like BlackRock, because they sold bad mortgages to those institutional investors. So is it really fair that a way that they're going to try to make up for that settlement is to pick up their consumers and depositors by their ankles and shake every nickel and dime that they can out of each and every one of their pockets? We're extremely concerned that consumers and depositors be treated fairly. We have confidence that if there's real competition, they will be treated fairly. And on the basis of the price signaling indicators, we have very serious questions as to whether or not there has been an antitrust violation. And we call upon the Attorney General to do a full and complete investigation to get to the bottom of this. Thank you. I'll turn it over to my colleague, Mr. Grijalva.